There's a new way of borrowing that doesn't involve having to meet your bank manager or borrowing from a seedy loan shark. Known as social lending, people borrow and lend from each other, determining the interest rates themselves. So how does it work? There are two social lending sites in the UK, Zopa and YesSecure. These are essentially platforms that people can lend and borrow through. Registration with these is free and loan applicants will be credit checked to work out which category or market they fit into, or determine if they're not suitable for a loan. Reasons for loans through these sites tend to be things like buying a new car or having an extension. You shouldn't view this type of loan as a last gasp option if you're in serious debt. In fact, more people get turned away from these loans than accepted. Once a borrower is put into a market group, they can then post their loan request. This says what the loan is for, what interest rate they're happy to pay, and if they'd prefer the loan over 3 or 5 years. Lenders can then bid to the borrowers, who in turn pick the bids they like and reject the lenders whose interest rates are too high. What usually happens is lenders then reduce their offered interest rates. To keep risk to a minimum, lenders can only loan small amounts to individuals, with loan amounts automatically divided by 50. So, for example, £5,000 will be divided up into £50 chunks. Borrowers then pay a one-off charge of £124.50 to borrow through Zopa or £80 with YesSecure. Some may argue that those fees are too high on small amounts of money, but one of the main benefits of borrowing through these sites is that you can repay the loans early, and there are no penalties for doing so. As you repay more of the balance, the amount of interest you pay automatically reduces. For data protection reasons, you can only see usernames, ages, and towns of other subscribers. If you miss a payment, either Zopa or YesSecure will contact you in the first instance, but if the problem is more serious, debt collection companies will do the chasing. There's a real community atmosphere on these websites, with forums for subscribers to air their questions. And while the number of people using social lending is still quite small, it's growing. After all, who doesn't like the idea of beating the banks at their own game?